You stare at the screen. The price is plummeting, tearing through support levels and destroying your positions. Panic sets in, so you hit sell. You cut your losses right at the bottom to stop the bleeding. And the very next second, the market aggressively reverses, ripping upward and wiping out your account. If you've been here, you've fallen into a classic trap, interpreting tick-by-tick chaos as a definite trend. You're trading completely blind. The market functions as a structured auction, a continuous process of price discovery between buyers and sellers. To survive it, you have to stop hyperfixating on individual candlesticks. You must train your eyes to read the market as a series of continuous, flowing waves. By stepping back and mapping these macro waves, you filter out the noise and locate the true direction of the trend. This diagram shows the three primary phases of market structure: an uptrend ascending, a downtrend descending, and a flat consolidation channel. An uptrend is bound by strict structural rules. It requires the formation of higher highs and higher lows. Each peak is taller than the last, and each valley sits higher than the previous one. Because the market is an auction, these aggressive pro-trend upward moves indicate that buyers are happy to pay the current price. We call these phases impulses. But eventually, buying slows down. Traders step back and let the price drop until it hits a lower level they are willing to pay. These temporary pullbacks are called corrections. A trend is an engine cycling through impulses and corrections. Identifying your current phase dictates whether you should buy, sell, or wait. How does a trader technically prove an impulse wave is actually continuing rather than stalling out? You look for a mathematical milestone called a break of structure. In this chart, we want to see the price push past the ceiling of the previous higher high. We draw a horizontal line straight across the flat top of the previous solid body, ignoring the thin vertical wick. To confirm the break, a full, solid candle body must close entirely above that line. A wick that merely pierces the line before falling back down is insignificant. Waiting for a verified body close protects you from acting on false breakouts. It proves the trend has the momentum to continue. No trend lasts forever. Eventually, an established trend runs out of buyers and faces collapse. This collapse triggers the definitive signal for a market reversal, a change of character. The mechanics are specific. The upward price momentum stalls, failing to make a new higher high. Then it breaks downward, cutting straight past the horizontal floor of the most recent structural low. You must wait for this entire shift to complete before betting on a reversal. Entering prematurely during the transition risks getting crushed by a weak pullback snapping back into the main trend. The reason weak pullbacks trap traders is due to the fractal nature of the market. Massive waves contain smaller identical waves nested inside them. Look at this massive 1-hour upward wave. If we zoom tightly into this small downward dip, the correction phase, we see it is built entirely out of its own jagged downward staircase. This smaller movement is substructure, a functional micro downtrend trapped inside of a dominant macro uptrend. Advanced traders can execute short trades on this substructure, but only if they acknowledge they are moving against the dominant macro current. Treating this micro substructure as the permanent trend is why retail traders get obliterated by sudden macro-level reversals. A trend's validity depends entirely on the time frame you are viewing. You must confirm structure across two different time frames simultaneously. Use a high time frame to map the overall direction and a low time frame to time your entry. If you execute a substructure trade, you must take your profits before the price hits the macro-level demand zone at the bottom of the larger wave. By stepping back, identifying the macro wave, and waiting for structural shifts to complete, you stop guessing in the dark. You finally trade with clarity.